everyone. I'm Jaclyn Rice Nelson. I'm the founder of Tribe AI. We are a collective of top machine learning engineers and data scientists. I will be your host for today, and I'm excited to kick off our technical talk series in partnership with Scale, and do so with legendary data scientist Drew Conway. Drew is known for many things. One of them is obviously being a founder, the other being the inventor of the Data Science Venn Diagram. But I've always thought that Drew just has one of the coolest jobs. He leads data science for all of Two Sigma Private Investments, which includes their private equity arm, Sightway Capital, Two Sigma Impact, Two Sigma Ventures, and if you're not exhausted yet, Two Sigma Real Estate. His team focuses on driving differentiated investment returns and decisions using data, a really interesting topic, and something we've seen a lot at Tribe as well is the value that data science can have on investment sourcing, on diligencing, on even post-investment to create data assets that really have value and move the needle for private companies. And in doing so, generate much higher multiples and investment returns. So I'm really excited to be here with Drew today to chat through all of this. We'll have some fun. And in true fireside chat sort of form, we have a very empty fireplace, but we'll start with an overview of kind of what's happening in the space, chat about the market around investing in data, and then also dig into tactics and some real talk about what it's actually like to be a data science practitioner, and also to really build out a program like what Drew has built and runs at a place like Two Sigma. So with that, Drew, I'd really love to hear from you. Of course, Two Sigma is one of the pioneers of data-driven investing, but it'd be great to sort of just hear a bit more about Two Sigma and then also how you ended up there.
Well, first, thank you so much for having me. I'm glad this is a fireside chat, although on the day that we were recording, we've all wished that there was a fire in that fireplace. This is quite
Me too.
Day here in New York. My journey to Two Sigma was an interesting one. So as you mentioned, I have been a founder, and actually immediately prior to joining Two Sigma, I was the founder and CEO of a startup called Illuvium. We built a technology platform for doing both real-time and forensic analysis in the industrial sector. So, large manufacturing environments, chemical processing, energy, things like that. And ultimately that company went into an M&A process, and we were acquired right at the really the beginning of 2019. And it was through that M&A process that I got connected with Two Sigma. Now, I've been in New York for a little over a decade at that point, working in data science community and working as a founder and working with small businesses. So of course I knew Two Sigma. It's one of the cornerstones of New York tech, but I'd never interacted with the firm professionally. And when Two Sigma showed up kind of interested in my business, it was quite surprising. I didn't think that Two Sigma was suddenly going to be operating oil and gas refineries, right? They're known for their investment strategies. But what I learned through the interaction is that Two Sigma was actually really interested in taking the platform of technology that they had built over the lifespan of the business, which had been so successful in implementing public market strategies, and thinking about how to aim that sort of significant arsenal of technology at less liquid asset classes, in particular private markets. And while ultimately my business was acquired by a different industrial analytics company, the idea of this remained really, really interesting and attractive to me. So as the story goes, several months after the acquisition was made final, I got reconnected with some of the MDs at Two Sigma that I'd been talking to in the early days of our M&A process. And we kind of got to talking, and to make a very long story short, we figured out a way to work together. I joined Two Sigma back in April of 2019, really with the mandate to start thinking about how to apply our technology platform to the commercial real estate industry. That was actually the first area that the firm wanted to start thinking about. And we spent the next several months, really the better part of a year, trying to prove out, or at least provide evidence that, in fact, if you were to take this massive asset of data and technology that Two Sigma had built and combined it with more traditional private equity data, in this case, data for the commercial real estate industry, that you would have a competitive advantage. And, as you said in the intro, I think the answer to that was a resounding yes. And now what we've done is started to broaden the aperture of that idea and start applying it to all of our private equity businesses.
So cool. I mean, this is why I'm so excited to have this conversation. It's actually quite hard, it seems, to not just have this idea or thesis that investing could be sort of impacted or augmented through data, but it turns out it actually is a pretty big deal to act on it. I'm just curious how that sort of pilot process went, to the extent you can talk about this. I know some of this might be secret sauce, but sort of like that idea of kind of moving from pilot to proof of concept and ultimate success, and then now expanding, as you already have done, to other areas of the business.
It's a great question. And ultimately, the biggest difference between what I do and the folks on my team do in working for data science and private investment versus what the vast majority of data scientists and analysts at Two Sigma do on the public market side is that decisions are made in private investment in a discretionary way. Human beings are sitting down, deciding, do I want to invest in this company? Do I want to acquire this property? And so all of the work that we do has to have a human interface to it, which, unlike much of the work that's done on the public market side, there you're building features, you're building models, and ultimately those strategies are implemented in a highly automated way. And so you're interacting with the market primarily through a technology interface rather than a human interface. And so for us, we have to think about what are the questions that an investor would need answered in order to enhance their decision making. And so when we started, and as I started in real estate, quite frankly, I had very little practical experience in real estate. I mean, the practical experience I had was personally having, purchased the home that my family and I lived in, and that was the one and only real estate transaction I had ever endeavored to do. But I was very fortunate in that in those first several months, I had the opportunity through the folks that I was working with to get a chance to meet and interact with really seasoned real estate professionals. And so I mostly listened during those conversations, but I would always kind of hold out an opportunity to ask at least one question. And typically my question would be, let's imagine that I could build you a machine that could answer any question for you perfectly. Now I can't do that, but let's imagine that I could do that. What would that question be? And when I asked real estate people that, whether they were brokers, investors, developers, they all answered the question in a relatively similar way, which was, well, if you could tell me with high degree of certainty that a particular market or submarket or neighborhood was going to continue to grow over a long period of time, then I could use that information, go to those markets, buy whatever I could, and hold on to it for as long as I could. And so that really got us thinking in the early days around market comparison. Can you use data to help inform that decision making around market? And that foundational interaction and idea is what has led to kind of the whole framework that we've built, not only in our real estate efforts, but really across all of our private investing efforts. And I'm happy to talk about that, but the idea being that there are these kind of broad top-down analyses and data science tools that you can build to inform the investors at the strategic level of their thinking. And then there are much more bottoms-up analyses that you can do to help inform their decisions at a tactical level. And there are some things that are broadly applicable across all different kinds of private investing. And then there are certainly differences as you think about, there's obviously a very, very big difference between investing in a building if you're a real estate investor versus investing in a early stage technology company if you're a venture investor.
A lot of what you just said really resonates with me. I think first being this idea, and this is something we see at Tribe all the time, of whatever industry you're focused on, the people at that company or sort of who are marred in the day-to-day are going to be the industry experts. And it's not the case that you actually need the technologists to have that industry expertise. But if they don't have it as part of the equation, they're not going to solve as interesting problems. And so I think there is something really powerful about this idea of taking someone like yourself, who's a deep technologist and expert at all things data, and then marrying that with like deep industry experts. And that's sort of like just deeply part of my thesis on how you can really drive a lot of impact across the industry. So it's really cool to see you also have, really thought about things similarly, and that you did not start as an expert in real estate and even some of these private investment areas like private equity, and yet we're able to be so successful. And then the second, I think, is sort of some of these use cases around market selection you talk about. Actually, what really like feels most interesting and kind of human to me is everyone's trying to figure out where to spend their time and how to spend their times in the highest leverage ways. And ultimately, that's what you're doing with something like market selection. It's like, don't waste time on an area that's not going to be as attractive from an investment perspective. Focus your effort on areas that are going to be highest impact and most likely to have companies or opportunities you're going to want to invest in. And if you could actually focus all of your team's time on those areas versus the less attractive ones, I think that's just wildly powerful for teams. And what you're saying is it's not the machine that's always going to do these things. There is always a human in the loop. And that's not going to change anytime soon, but humans can be augmented by the data.
Exactly. Just quickly to put some more examples on exactly what you're saying, when we think about what we're building, and I should be very clear, when we seek to build tools for our private equity businesses, it is a hand-to-glove relationship with the investors. And for folks who are thinking about, and I think this is true in all times of application of data science in business, but in private equity, where I think it is a very new process of trying to augment their decision making with data, you have to be fused to those investors in really trying to think about, because there's a big difference between something being interesting and something being actionable, right? There's a lot of interesting things I could tell a private equity investor with data, but if that doesn't move the needle in terms of helping them focus their time, then it's a blog post or a slide in a slide deck and nothing else. And we're always thinking about what is the use case and how does the investment team think about actually using this to enhance their decision making. So to your point, I mentioned this sort of the strategic versus the tactical. On the strategic side, it's often about how do I widen the funnel of opportunities to see, whether you're looking at acquiring businesses or looking at acquiring buildings. The worst thing that can happen to you is to miss an opportunity, to have not seen an opportunity that was out there. But when you do that, when you widen the funnel, then you need to be able to have some systematic way of assessing how good those opportunities are to your strategy. And so that's really where data science can be incredibly powerful, because we can use not just data science, but just good software engineering to widen that funnel, make sure I'm seeing all the things that I could possibly see, and then developing methods for effectively sorting a list, right? Once I have lots of things I want to look at, how do I sort that list and create priority? And that means working with your investors to say, what are the things that you care about on a relative basis that would help you assess a deal either in a reactive way, so if something comes down the pipeline and you want to react to it, or in a proactive way. Now you're saying, okay, these are the kinds of industries, these are the kinds of markets that I think need a strategy. Now here are the ones that we think are the best. Then when you flip to the tactical side, it's, okay, now that I'm looking at a deal, can I use my data to help interrogate a specific thesis I have around that deal? Right? Are there things that I, as an investor or as a team of investors, believe or need to believe to be true in order to get comfortable with this deal? And can I use data science to either support or reject those theses or those hypotheses? And that in a very broad sense is kind of the ebb and flow of how we do our work.
I'm very much with you. I think the example that kind of jumps to mind for me, I think you're talking about a very traditional linear investment process, which is still true in sort of private equity. I think venture right now has like blown up, what the like traditional order of operations was. And so you see even firms like Tiger kind of using their data assets to actually like preempt rounds and like due diligence before they even talk to a company so that you can move really quickly. I'm curious what other trends. I know I said that we would start with trends and market, and we already jumped into kind of tactics, but I'm just curious like how you sort of see the landscape of private investing and their sort of utilization of data, and both where it's most impactful and also who's doing what, like how common is this? Because one thing I feel like I hear from like PE veterans all the time is like, of course a firm like Two Sigma is doing this, but that's not where our strong suit is, right? We get alpha in other ways. My answer to them is always, but why not have both?
Right.
And so I'm very curious kind of what you're seeing, and obviously Two Sigma is incredibly well positioned to leverage these data assets, but just as you look across the market.
It's an interesting time, and I will preface this by saying I am by no means a private equity veteran, so my perspective is limited based on the experience I've had over the course of the last 3 years. But a firm like Tiger, and in some sense Tiger has almost no peers in terms of the size of the scale, but there are many kind of traditional legacy, well-established private equity firms that I think all of which are using data. I think, oftentimes we think, oh, these traditional firms, they're not using data. And I think that's not true. In fact, the example that I've often heard from, particularly from the folks that I work with or have worked with in our real estate endeavor, they're all leveraging data. All decisions are using data because it's an incredibly data-rich asset class. And that's true for real estate, just as it's true for private equity. When you think about private equity, typically investing in businesses that are producing revenue, have been around for many years, are in industries that have high growth. And so there's lots and lots of data. And these firms know that, they use that, but their usage of it is typically sort of post hoc. And what I mean by that is, they've used a traditional approach to identifying an opportunity, diligencing that opportunity, and now data is used to kind of buttress and reinforce whatever that particular idea is. They're not being data driven, right? Data is not helping them identify opportunities, helping them evaluate on a relative basis or in an absolute way whether one opportunity is better than the other. They're still relying a lot on their own traditional kind of experience, intuition, networks, and really a lot of boots on the ground work, whether, and again, in real estate, literally boots on the ground, visiting an asset. In private equity, jumping on the phone, meeting with management teams, things like that. What I will say about large players and their use of data is that many of them, I think, are getting much smarter about how to leverage the data that their own portfolios are producing. And if you're a very large scale player, simply looking internally at how your own assets are performing can actually give you an enormous advantage, because you have access to data that nobody else can, including big quant shops like Two Sigma get access to, because that's privately held information. That you can leverage it. So I do think there's a trend where scale players, whether they're private equity firms or large asset managers globally, are recognizing the value of that. I think on the other end, you have firms that are specialized firms, so that focus on investing in a particular kind of asset. In private equity, you see lots of firms who focus on consumer. They have a real understanding of the consumer market. In real estate, you may see funds that are really focused on hospitality, and that's their area of expertise, and that's what they zero in on. There again, I think there is a push to be more data driven. There are tools and services out there that people are using, but there's still very, very little attention or very little focus on bringing those things in-house. And I think, a reason for that is it's a very expensive proposition to, particularly if you've been successful in investing in a particular asset class, say, we're going to start developing a technology and data science team internally to change or augment our investment process, if in fact that investment process is working. Right. And that makes perfect sense. If you're running a business, it's a challenge to say, well, I think we should start adding data science and technology, start getting headcount, start investing in data sets. As probably better than most, that requires a significant investment, both in people and technology. So I think there is some resistance there. Where I've seen most of the interesting innovation is, no surprise, in the newer, smaller shops that are trying to, be very tactical, very precise in how they use data. And that's effectively, where I think, while Two Sigma is certainly not a small shop institutionally, our endeavors in data science for private equity are relatively new and still remain, somewhat experimental as we're trying to figure out, where is the highest and best use for this stuff.
I think that's probably really encouraging to others, which is, hey, even a Two Sigma is still early-ish in this journey. I'm curious kind of how you overcame any resistance, and maybe you had less of it because you are such a data-driven company. I couldn't help think about that when you sort of talk about it really still feeling experimental. It's like, what got people over the hurdle? And what would you say to, I think one of the messages I heard in what you're saying is like, hey, the smaller funds and firms are coming for you. But I'm curious kind of what worked internally.
It's certainly a learning process that I think will probably never stop for us, and that's probably healthy. But, as I said earlier, our interface is a human interface. And so that means that the data science and engineering teams and the investment teams have to be, if you'll pardon the cliche, speaking the same language. And that is certainly not where we often start, particularly if, we're working with investors who have been doing things, again, successfully for their whole careers and are now being asked to start thinking about how to augment or change that decision-making process through tools that my team will build. And so one of the challenges we've had is actually understanding and getting very, very specific around what are the questions that we want to have answered. How do we identify the specific use case? And I think importantly, how do we know when we actually have something that's worthwhile, right? Again, thinking about it in the strictly kind of data science and machine learning sense, when you're thinking about building a new model, you often have some benchmark that you're working against, right? If I'm going to build a new computer vision model, I have many benchmarks that I can look at in terms of the precision of that model. And so if I can incrementally improve on that, then I think I have a better model. Here in private investing, we really don't have a lot of that, right? Because it hasn't really been done before. And in order to have good benchmarks, you have to have history. We don't have any of that. And so one of the challenges we've had is working together to first speak each other's language. When a private equity investor thinks about the quality of a forecast or the quality of a model, and they're thinking, what would be good, versus a practitioner who knows all models have issues, none of them are going to be perfect, and kind of coming to a mutual understanding of that. But then also once we've gotten past that, okay, now we're going to implement a tool. How do we know when it's good enough to actually start augmenting a decision and making the investors feel comfortable using a tool versus relying on whatever their previous use case would be, which is either based on intuition and expertise or leveraging third-party providers of data that they've worked with in the past. A lot of that is just, it's not technology work. It's sitting down, building a strong communication relationship with the folks that you're working with, having a lot of humility about the things that you don't know and need to learn, and being a good teacher, right? And being able to try to break down problems and help people understand why something works a certain way, versus talking over their head about a particular machine learning model and how it gets parameterized.
Okay, so if I'm an investor, I'm probably feeling really encouraged and like, yeah, I want someone to sit down with me and teach me all of these cool things. But if I'm a data scientist, I'm probably thinking like snooze alert. That sounds like a lot of time not doing the things that I love and I'm amazing at. So maybe just talk to us also about like, what public data are we talking about? Similarly with private data, and then what are some of the like hairy technical issues and actually getting value out of that data?
I'm glad that you bring it up because the reality couldn't be further from the truth. That these are some of the most, I've worked in a lot of different kinds of data science problems in my career, as I think some people know, but if not, by training, I'm a social scientist. So what I really love is to think about how data can be used to understand human decision making, particularly human decision making at scale. Why do groups of people make choices? And if that's something that you have even an inclination for, there couldn't be a better area to try to get into, because there's so many different kinds of questions, both internally as to why would we value a company or a building or a business one way versus the market, and then also trying to understand why do certain assets or submarkets behave in the way they do, because all of that is driven by human behavior, right? We want to understand, how are consumers interacting in the marketplace? We want to understand how are businesses interacting in the marketplace. Why are certain developers building in a place? Why are certain businesses moving to a particular place? And so, when you talk about data, publicly available data, you can think about all the kind of demographic information that you get from places like the US Census, really driving a lot of the initial foundational work that we're doing, thinking about labor market data. Why are certain kinds of jobs, why are certain labor markets growing in certain places versus others? Consumer behavior, how are consumers interacting with the marketplace? Are they voting with their feet and their dollars to go purchase things from a certain kind of business? Combining all those things together, but then being very mindful, sort of tactically thinking about kind of the nuts and bolts of what we do. How does that information ultimately lead to a better decision for our investors, right? Can we, for example, build a model that gives them a long-term view of where a particular market is going, right? Something that is really fundamental to thinking about private equity investing, because unlike public market investing, particularly the kind of investing that a place like Two Sigma does, when you invest in a business or a building, you have to own and hold that business for at least several years, 4, 5, 6 years. That means that our forecasting models have to account for that range of time, which for anyone who's ever done any kind of forecasting model, you think about trying to have high degrees of accuracy out that far, it's incredibly challenging. This is a challenge that we face every day, both kind of technically and thinking about what data sets we have, what kind of what features we're going to engineer, what kind of models or do we want to build, but then practically in interacting with our investors, how can we leverage the results of these models given the uncertainty that they have, because of course they'll have a high degree of uncertainty going that far out into the future, and still make them useful and still make them actionable for those investors. So again, I use the example of kind of sorting a list. Well, the output of our long-term forecasting models is something we can use to sort a list. And again, anybody who's ever done forecasting knows every one of, pick your method for forecasting, whatever you like, they'll produce a number for you. But if the investors look at that number and it doesn't make any sense to them, or the list is sorted in a way that is completely orthogonal to their own preconception around the market, then it's completely useless. Then all it is sort of an academic exercise. And so you have to have an understanding of how those models are operating, what their strengths and weaknesses are, and then how to connect that to the way that an investor wants to think about assessing, the opportunities that they're looking at.
Yeah, no, I'm very much with you. First of all, I think your passion and excitement and energy just comes across so strongly that if people listening weren't already excited, I think they are now. But it's also consistent with what we've seen. We've, as you know, done a lot of work with private equity firms and private equity backed companies, and they tend to be the projects, interestingly enough, that our community of these amazing technologists get most energized by. I think it really comes down to sort of part of what you said, which is this like translating and figuring out how to actually marry this industry expertise with the technology. And part of that is also building really interesting user interfaces that non-technical people can actually engage with in productive ways, somewhat independently, hopefully. And then the other, I think, is actually just how tangible the real world impact is. So I wonder if you could also just talk to maybe some like success stories, or obviously without giving too much detail, points that have really been kind of like internal case studies, either for you or for others in the industry, as like, hey, this really works.
Speaking about it in a general way, I think the biggest success stories we've had, a little bit of what we talked about already, in that we have found that thinking about how to translate the concept of value in a long-term way for our investment teams, and being able to present to them composite views of that so that they can understand value in a relative way, has been incredibly successful. And the reason that it's been successful is that building those tools alongside the investors means that while they may not, they're not practitioners, so they're not digging into the code and understanding the specific mechanics of a model, but being able to understand why, say, a certain set of features are the ones that are driving the outcome, and having those set of features either match their intuition or ultimately have them understand, oh, now I understand, okay. So for example, one of the things that I think is true in every business now, trying to understand the impact of COVID, right? What has been the impact of COVID on different markets, again, whether it's in real estate or in private equity. That is something where traditionally I think private equity investors would really leverage what they're seeing in the market and what they're hearing back from their relationships, their colleagues, people, again, kind of boots on the ground, versus what we can do, which we can actually attempt to measure that directly, right? So we can say, okay, here's our view on the data that we've seen leading up to 2020. Here's the immediate response of the market through 2020 into 2021. And here's how we think that will play out going forward. And we can do that through a combination of a set of different long-term models trained on different windows of data. We can also use short-term models that are simply trying to show the relationship between, say, a set of features or variables that were important in our long-term models, but then because of COVID, they became very, very noisy, and then reduce the window of time in which we're trying to understand them and say, well, are we seeing a true structural change in the market, that there'll be a long-term impact based on COVID, or do we think that this is actually not a structural change and that in fact the underlying data generating process has remained consistent? And when we present those kinds of findings to the investment team, almost immediately say, now I understand why data science is so important. This is something that I would have never been able to see in a traditional sense. And that's been, I think, very, very rewarding for us. The other thing I'll say, which is more tailored to the private equity space and not really necessarily true in real estate, at least not yet, is data science and engineering together, really data engineering, can have a massive impact on a portfolio company. So a company that we have identified and worked with at the strategic level, when we get to the tactics and they're part of the portfolio, now we can start to bring that data science expertise we have to help optimize how they run. So whether that's thinking about, what are the best markets or neighborhoods for them to open up new locations, how to think about their own marketing and ways that they can reach their customers, or even a better understanding of who their customers are, right? And being able to consolidate their data to a single platform and then show them actually, these are the cohorts of customers that you have, and here's how they respond to different kinds of interactions from your business. Those are the things that I think will become much more, as data science and technology become much more a natural part of private equity investing. I think that will be an area that drives a ton of value.
Yeah, I very much agree. And I've always thought the thing that makes private equity backed companies so interesting is that they're already quite successful. They've often been around for a while, which means they actually have quite a bit of data. Actually, the way you talked about the discovery process at Two Sigma around what kinds of problems are most important to solve, it's really similar to how we think about, supporting portfolio companies or private equity backed companies, because ultimately it's what jobs are people doing based on intuition. Something like, say, pricing, where there's human discretion, there's just often not a very large band of experimentation. And so if you were to take a more data-driven approach, actually you could significantly optimize pricing strategy. And in doing so, this is assuming you can actually move the needle by customer or on price or by business, and really generate just huge returns that really move the bottom line. And all of that to me comes back to similar to what you said, I have my magic wand, what are the things that would change in your business? How can we actually really drive impact? So all of that kind of speaks to, I think, why there is this sort of really interesting fit between private equity and data science and machine learning, and both from the companies you all invest in and the investing strategy itself, which I think might be counterintuitive to some. And so it is worth really highlighting, because I know this is a topic you and I get excited about, but we're nerdier than most. So it's really cool to highlight what gets you so excited.
Yeah, and maybe one final point on that, and this is a little bit of thinking about the future in an area that's really exciting to me. Across the work that we're doing, the vast majority of stuff that we've thought about and worked on and even built over the course of the last few years has been focused on how to as you said, augment the decision-making process for the investors, oftentimes in a linear way, although as you know, and anyone who's ever been involved, these things operate in highly nonlinear ways too. You can drop out of a deal, come back around, there's all kinds of dynamics there. But they're often fit to a strategy that has come, from the investment teams based on, how they're reading the market. And one of the things I think is really exciting about some of the work that we're doing now is that we're seeing that you can use data science to actually scale a strategy once you've interrogated its bona fides with data, right? So if I like a deal, I say, okay, this is a good deal. Data science supports it for XYZ reason. And I think that we may actually be able to do this a whole bunch more times in the market, whether it's investing in a certain kind of property asset or a certain kind of business in a certain subsector. What data science allows you to do is then very rapidly and at scale identify where those opportunities are in the market. And then that becomes the next stage of work that your investment teams can do. And so that it's not just, we're not just doing individual one-off things where you say, okay, deal comes in the pipeline, goes through the data science process, checks all the boxes. We do a kind of further deep dive, boom, we go to committee, we invest in it. Now we run the cycle back, and it's kind of this iterative thing. Actually, what we're seeing is that you can go through that process one time, and if it turns out that you really like what you're seeing, now the data science can say, well, if you want to do more of these, here's your best opportunity to do it. Here are the markets, here are the assets, here are the businesses that you can do that in. And that scaling, I think, is what gives newer players who want to have a more data-driven approach an advantage over scale players, where you'll never be able to beat them on the number of people who are out in the market. But if you have the data science backing you, that gives you a different kind of advantage.
And how does that manifest in the market? Like, is it your win rate? You expect your win rate to go up? What sort of happens? What's the outcome outside of I can make better decisions?
If you feel like the data science has gotten you to a place where you've made a better decision, and now I want to repeat that at scale, then the data science can be very effective at saying, well, here's all the other things that look like that in the marketplace, right? For example, we might say in real estate, we do a deal of a certain kind of asset type in a certain kind of market, and we think, man, this deal was a good deal. I wish I could do 10 more of these, which is like a typical thing that you might hear in a private equity meeting. And in a traditional sense, that would mean, okay, maybe the junior folks, the associates in the room, get on the phone, call everybody see if you can find deals like that. But what we can do is we can say, actually, we already know where the next best version of that deal is in the marketplace. Now you should just go try and tie that deal up.
If that's not impact, I don't know what is. Thank you. I always have so much fun talking about this. I really always just love spending time with you. If others are interested and want to continue the conversation, of course, we will have the Q&A. If they want to learn more about Two Sigma or your work, how should people get in touch with you?
The easiest way to get in touch, twosigma.com. All of our private equity businesses have, different spaces up there. There's lots of interesting case studies online that we put up, and reaching me is fairly easy. I'm a pretty easy Google, Drew Conway. You can find me, on all the socials, Twitter and things like that. And I tend to keep things pretty open. So if anybody has any questions, please feel free to reach out.
And then if you do Google him, you'll see lots of fun Wikipedia articles on his early work in terrorism, counterterrorism, which is a topic for another time.
Right. You'll also find all the reasons why the data science Venn diagram is wrong, which I appreciate.
Great. I think that sounds like a perfect topic for our next conversation. So thank you all. Really looking forward to our next Tribe and Scale talk, and have a great rest of your day.
Yeah. Thanks, guys.